All right, we are live with another edition of the State of Bitcoin podcast. And for those listening on Podcasting 2.0 apps like Fountain, I really appreciate it. Be sure to send me a boost and leave a little comment, and I'll read them out in the show. I don't have any comments from you guys. I just getting these blank boosts. So if you're leaving one, leave a comment because I'll read them out next time. But I got a very special guest. I'm doing something that's very close to my heart. It's, a Make-A-Wish Foundation kind of thing. I'm bringing on this kid named Joey, and he really wanted to come on the podcast, so I'm bringing him on as, a very special thing. So Joey, welcome, and shout out to the Make-A-Wish Foundation.
Bro, you told me this was the Apple earnings call. I didn't know this was a stupid candle pot again. I hate these things, man. Oh, what's going on? It's good to be here. Doing a little pinch hitting for you today. Happy to show up here on such short notice from my palatial Canadian basement.
Yeah, exactly. But so if you don't recognize the voice by now, it is Joey of the Canadian Bitcoiners podcast. I've had him on a couple times. He's the second tier co-host behind Len, who really carries and pulls the weight. But Joey, how you doing today? You're putting on the chapstick. You a little cold? I see you're wearing a sweater. I'm actually sweating where I'm at right now. I'm kind of heating up down here. So how's it going up there in the Great White North?
Bro, it's like 10 degrees here, maybe Celsius, 10 degrees Canadian. I'm good. I'm lubing up because it's dry outside. I was outside with my dog just now trying to coax him into coming back in. Poor guy's been cooped up all day. This is normally when I would take him for a stroll, but instead I'm here talking to you, trying to pretend that I'm not looking at my phone to see if Apple beat and Amazon beat or not. Because if they both beat, we're both going to be rich tomorrow. And if they both lost, if they both underachieved, we got problems, buddy. We got real problems tomorrow morning.
Yeah, I mean, this is the Bitcoin show, though, man. I mean, come on. But I think at the end of the day, I'm
Amazon off 12%, Brandon. Okay, what happened with Apple now? It's a disaster. It's a disaster.
They're falling apart, dude. Everything's red. The world is dying. I mean, where do we even start? So first off, we got to get it off the table here. Okay, right? Go. We had Masa in the replies already. Shout out to Masa. The people want to know, why did you stop the DCA?
I still think this economy is phony. All the strength is phony. I don't care. I see on the Bitcoin chart, we're above some, moving averages. People love to do that stuff. They read the tea leaves. I think the growth is fake. I think that people are looking at this economic number for Q3, and it's I think it was plus 2.6, something like that. There is a metric using imports and exports based on dollar strength that will force an inaccurate reflection in GDP growth. Now, I can't remember exactly what the mechanism is, but the gist of it is that when the dollar is super strong against that basket of currencies that the trading partners of the United States use, it forces GDP to grow even if the economy isn't growing with it. And I wish I will have something on that on Monday's show when I have some time to think about it and read about it, but it ain't as rosy as everyone thinks. And I'll tell you how you know this, because the Biden administration is still giving money away to anyone who asks for it in the lead up to the election. They're still releasing SPR in the lead up to the election. They're still doing all these things. If the economy was healthy, you wouldn't see this kind of programming because it doesn't make sense. And it pushes to the front of minds when it comes to the median voter. Okay, well, if the economy was as strong as they're telling me, how come I can't afford groceries? How come I can't afford gas? How come I can't do this? How come I can't do that? They wouldn't be giving that money away because it reminds people about that. And so this number GDP 2.6% is bogus. Now, what if I was a competent commentator in America, I would say, look, this guy had me believing for a year that any problem with the GDP, with the economy, maybe not a year, it's probably about 10 months now or 8 months, was Putin's fault or inflation that was systemic because of COVID, whatever. It was always someone else's fault. Now he's going to try and tell me through his scion, Karine Jean-Pierre, probably as we speak, actually, they're probably doing the White House press hour. These guys are going to try and claim victory over this. It's horseshit. It's complete horseshit. And so to your earlier question with DCA, I think this is phony growth for sure. I think they're going to get swamped in the midterms. And I think you're going to start to get a mask off moment because there's no way the Republicans are going to keep some of these programs going. There is just zero chance. They can't risk having 2 years of kicking the can down the road and then having the thing blow up on them right before the presidential elections in 24, which is exactly what the Democrats did. They tried to kick it down the road past 22, and they fucked it up. And now you're having the chickens come home to roost for you right before people go to the ballot box, or, mail in 100 ballots each, whatever they're doing over there. I'm not sure. I saw today that Pennsylvania is not going to be able to count their ballots for the midterm in one day. Amazing. You guys are first world over there. It's quite an operation. Unreal.
I mean, the crazy thing about the states and all these elections is how different it is state to state. I mean, it's just insane. And like something needs to be like more, I guess, federally regulated with that. But I mean, it'll probably never happen because nobody could ever agree in this fucking country. So
don't the states hate the federal government over there as like a principal point? Like it's like their raison d'etre to just hate the fucking government no matter what the federal government says. They don't want to do it. That's like the default position. I thought that's how it was.
At a certain point, I mean, it's kind of becoming more like Republicans are more for like state governments and Democrats are more for like the federal government kind of having overall control. Only if it's their policy that they want, kind of thing. So, I mean, that's just kind of how it is at this point, right? I mean, it seems like everybody's happy if their people are doing what they want, but Roe v. Wade gets overturned and
nice. We're going to start with Roe v. Wade. Okay, that's good.
We can get into some controversial topics and other things like that. But I mean, it's like, I think there's a lot of like I guess misinformation out about all this kind of stuff, but it's being labeled as misinformation when it's actually probably the correct information. So, a lot of back and forth here and there, but you kind of touched on it a little bit, right? So there's kind of some, I don't know if I don't even know how to describe it, but maybe like faulty, like hope behind the macro economy, seeing like, all right, it's already bottomed out. I think the general sentiment when CPI, like maybe 2 months ago came out was like, all right, it already bottomed. And then last month it got higher than it was before. If I'm not mistaken. And so I agree with you on that point, but where I'll push back with you a little bit on the whole Bitcoin prices, it has been it hasn't decoupled fully, but in the last quarter, there was a positive growth in Bitcoin in Q3 by 3%, and growth and everything else got absolutely crushed. So Bitcoin was relatively flat.
Are you the decoupler meme? Is that you?
Yeah.
I got to go to bed. There's one more decouple.
Right? But we've been seeing it, right? Like we've been seeing Bitcoin not really change hands or anything like that. Most people that are kind of coming in now, I mean, they're coming in and holding. They're not really selling or anything else. So that's the only, main hope that I see for it not to crash. But I do want to get into the whole Bitcoin miners kind of capitulating and selling not only equipment, but selling their Bitcoin holding.
We should. Let me steal, man, your bull case there.
Okay.
We mentioned this on our show on Monday after the program was done, because I didn't want to talk about it on the broadcast. It didn't really fit in any of our like whatever brackets. But this guy, Harris Kupperman, Canadian guy, trader, energy, oil, specifically uranium these days. He's like big on uranium, runs this newsletter called Kedem, KEDM. And he was saying that he would not be surprised to see a Bitcoin pump this week, a little bit of a pump, as people who are in the queues exit the queues ahead of earnings and try and park their money somewhere that's been a little bit flat. And he thought Bitcoin was a good candidate for that. And sure as shit, a day or two later, you get that little bit of a pump into the mid 20,000s, almost 21,000, right? It's about 5% pump. Ethereum that makes out close to 10 or 12 over the same 2-day stretch. So, is he right about that? And at the end of this sort of earnings cycle, now that you see Amazon off 12%, I'm buying Amazon tomorrow. If Amazon's down 12% or 15%, I'm buying that tomorrow. If I'm one of these people who rotated into Bitcoin or Ethereum and then, got out of that Amazon /Apple /Microsoft earnings cycle unscathed, more or less unscathed, you're going to rotate back. So let's see if leading into the weekend, maybe middle of next week, we see another drop in Bitcoin. You may, and you see some of those stocks rebound, Apple, Amazon, Microsoft, Google, even, I hate to say it, but Meta, possibly as well. Let's see, if that thesis turns out to be true, you might see exactly that.
Yeah, I mean, it'll be interesting. I mean, we're seeing a lot of the stocks. I mean, I've been tweeting about Meta too, kind of dancing on some graves. If you've been following me for a little bit, you probably know why. But I mean, I think a lot of these growth companies are just, they're kind of coming back to just I guess almost like value level PE ratios and other things like that. And I think
they're still 20 times PE. Some of these guys, 20 to 20, 30 times PE. They're only value because they were trading at 100 PE a year ago.
Exactly. And that's where I think, like, at the end of the day, that's going to be kind of where things lie for a little bit. And I think, value has been like kind of an investment thesis that's been getting crushed these past 10 years, because we've been seeing so many of these growth companies and kind of come in and just shoot up and have ridiculous stock valuations. And that's kind of been my thesis, is that throughout this recession, everything's been overpriced. There's been so much easy capital gaining that value is going to kind of start to make a little bit of a comeback. And we'll probably see that, for however long that this recession lasts. And I don't think that it's going to be something that we're going to immediately shoot out of, unless, we kind of keep down this cycle of just printing whenever there's somewhat of a recession. Maybe we'll see like a mini, cycle up or things like that. But that'll just kind of kick it down the road for a major depression. So I think, we're going to have to see the Federal Reserve kind of keep raising rates, have an initial shock to the system. And then I think we're going to be flat for, a decent amount of time. So,
okay, you saw in Canada, we had our raise yesterday and everyone was predicting 75 bips. You see, we only did 50. We're done.
Yeah.
We're done. And you guys are done too. You're going to do one more, and then you're going to either pause or you're going to start really tapering those raises. And like, to me, I look at that, and I'm looking now, if I pull up my trading view and look at some of these stocks, like Apple must have missed too. Amazon's down 20% after the bell, 5% during the day, 20% after the bell. So it's trading under $100. Apple's trading at under 144. Coinbase is probably going to miss too whenever they report. Microsoft is down another 4% today. Like these stocks, this is the plumbing for the entire virtual digital economy. No matter what you do, it's on Amazon, it's on Microsoft, it's on Google, it's on Apple. Those 4 companies. Everything you do is there. Okay. If you can even include Facebook in that, if you really are a glutton for punishment, but you could, if you wanted to put Meta in there. So you're telling me that in an environment where the 2 North American CBs that people care about are starting to taper their interest rate hike regime, and Europe has already done a major pivot in the UK, and the EU will probably follow soon too. These guys are all changing their tone at the same time. Are you really telling me that no one's going to be buying? Like, I personally, to your point about like what's valuable, Amazon, Apple, these companies are like, Brandon, if I got to buy something, I'm not going to the mall. I'm going to Amazon. It doesn't matter what the price of the stock is. It doesn't matter what the interest rate is. None of that shit matters. I'm going to Amazon first. And so when people are like, oh, well, the Qs are becoming the victims of their own success, or the victims of the new monetary regime, I'll just say, like, you don't have a better idea. Value is not making a comeback, because value, I think, is like a code word for companies that were successful 15 years ago and just aren't anymore, because there's better research available, because there's monopolies and oligopolies forming in some of these sectors. Like I've never been a value guy. I don't know a ton about it. I follow a few value investors, and I know you and I are in a group with the guy who has some exposure to value investors. And I don't know, like, I just don't see the point. Are you telling me Amazon's not going to be around?
No. That's not really what I mean by that.
I know you're not, but like, the royal they, like, the ether of people.
I think, like, at the end of the day too, like, you got to look at how these things are presented, right? So it's like kind of the Ben Graham thesis, the what's his name, Warren Buffett, and he came around to Apple. And so, I mean, like, I think at the end of the day, like, some of these stocks that are, are growth companies are going to be kind of looked at more as like value plays. And you're exactly right. Like, the guys like Amazon, Apple, like, those guys aren't really going away. Like, I'm talking to you on a Mac computer, we both got probably iPhones, and, I think, like, right now too, if you have the AirPods and whatnot, yeah, you have them in right now. I think if the AirPods were just a singular company, just that one product, they'd be like a top 15 grossing company globally. So, I mean,
iPads made more money I can't remember which quarter it was last year, than Netflix did. iPads. I don't even know anyone with an iPad. That's like boomer tech. They made more money than Netflix. That's pretty good, I think.
Yeah. I mean, and like I know you and I don't probably use iPads that often, but like I know some industries that, you know, you're out in the field, you're taking notes and they rely on iPads. And so those aren't going away anytime soon. So I mean, I think you know, that these companies kind of have this moat and they're not really going to go away. And it's kind of like this all, you know, this facade, but everything's been so expensive just in the stock market investing and everything's been going up. I think just valuations of companies are going to start going down and they're going to start getting more reasonable. And then, you know, the way you evaluate a company is going to be, you know, you'll probably have a little bit more success if you're doing it based on the value investing principles is kind of what I'm getting at. You know, like you're seeing like, you know, before it was like, all right, who gives a fuck about PE ratios, right? Like you can invest in Facebook at 113 price to earnings ratio or whatever it was, you know, something crazy. And it didn't matter because Facebook's going up. Who didn't use Facebook at that time? But now Facebook's at like, you know, Meta's at like a PE ratio of 10. And it's like,
Yeah.
okay, well, now you got to actually consider like what you believe in that company. Right. And so I think it's the same kind of thing with like all of these growth companies, so to speak. And I think, you know, you're exactly right. Like I had to go to the store yesterday to get contact solution because I was out and I was pissed that I couldn't wait like the day that I needed to get contact solution from Amazon. I actually had to drive 5 minutes down the road. So, you know, I mean, I agree with you 100% on that. But, you know, I think that the biggest thing that, you know, bringing it all back to Bitcoin is this theory that I've been talking about it on a few different things like our spaces. And I was on a podcast yesterday. That's, I think, going to come out soon, the passive income podcast. Yeah, I mean, I brought it up there that I'm really worried about how this kind of sideways movement with Bitcoin is going to affect all the miners. And we're seeing kind of a capitulation, selling off of equipment. So ASICs have never been cheaper. And then we're seeing like a sell off of a lot of like public miners on their Bitcoin stash. So I pulled up a tweet here as well from Sam. So if you're not following him, shout out to Sam. But he basically put together this table here. And, you know, he also said Glassnode's estimated about 78,000 worth of BTC still in their wallets. But, you know, you kind of see it like here across the board, the total just going up to, you know, around 46,000 in April 2022. And then you kind of see like that public miners stash is not growing. And obviously they're mining Bitcoin, right? So they're getting more Bitcoin every month. And now they're kind of selling at a rapid pace because the amount that they're mining is not keeping up with the amount that they're selling. And so there's going to be this interesting spot that we're in where energy is getting more expensive in Europe and the United States and all these other countries. And the thing that worries me is that I know a lot of these miners have contracts where it's like, we're going to get this amount, you know, whatever it is, 4 cents a kilowatt, 2 cents a kilowatt.
Power, like forward power procurement. Yeah.
For a couple years. Well, if those contracts end and it aligns with a drastic energy crisis wherever they're located, are some of these miners either going to be forced to move to somewhere else where the energy isn't as low, or kind of kicked out of there because, you know, there's such high demand for the limited amount of energy that country has, or B, that energy is going to become more expensive just naturally over time. And so, you know, they're going to start losing money and have to keep selling equipment. And as this hash rate keeps increasing, we're going to see a lot of miners just start to fail. You know, I had Ben Gagnon on my pod last week, and he was talking about there's like 50 public Bitcoin miners now globally, or around there. Maybe that's not the exact number, but relatively close. I wouldn't be surprised if we start to see that kind of drop to maybe even like 15, 20, like get down there because of that. So talk me off a ledge here. Do you kind of see like what I'm seeing here? Or do you think that, you know, maybe some of the miners are a little bit more, I guess, well positioned going forward?
Okay, couple things. Let's put some framing around this. First of all, as retail investors are often advised, Bitcoin miners should be advised as well. You cannot hold in Bitcoin anything you cannot afford to lose. Core Scientific is learning that lesson the hard way today. If you look at their stack there, they are deep blue, you know, like undiscovered species of fish blue around April 22. And then They're, my swimming pool today in September, 1,000. I think they're down to about 24 Bitcoin after that sale last month. So they have almost nothing on their balance sheet now in terms of Bitcoin. If you can't afford to run your company, if the price of Bitcoin goes sideways or down for 3 months or 6 months, like it has every other time a bull market has run its course, by the way, not the first time, you're not a well-run company. I'm going to take it a step further, and I would be curious to hear your point of view on this. I know Len disagrees, or at least, thinks I should add some caveats, but these publicly traded mining companies holding Bitcoin on their balance sheet, this is not a winning strategy. It's a cope and a virtue signal for Twitter likes and to pump up the number of people who want to invest in the company because of net asset value. I understand the net asset value argument. Basically, that if you hold more Bitcoin on your balance sheet than the enterprise value, there's no way you can lose, right? You buy the stock, and if Bitcoin rises, then the net asset value catches up or whatever, and you're off to the races. But pragmatically, in the real world, you need cash to run an operation like this. And if you're taking a loan against Bitcoin, an asset is the most volatile. There's nothing more volatile than Bitcoin. Like, let's talk about like, oh, look, bonds are more volatile now or whatever, the S&P, the Dow. Okay, fine, whatever. You want to make that case, no big deal. But the fact of the matter is, generally speaking, Bitcoin is the most volatile asset. So if you're levered up to run your operation day to day against an asset that's, crazy volatile as your collateral, you're asking for trouble. My suggestion to the miners would be basically two things. One, spend that money trying to push for legislation or political gains that would make that price less volatile. Spend that money on having somebody elected or on a lobbyist, the way that the Ethereum guys are. I hate to say it, but that Greenpeace thing comes out and it lands with a lot of people. It may not land with you and me, but it lands with a lot of people. That the stuff about proof of stake being cleaner lands with a lot of people. It may not land with you and me, but there's many people for whom it does hit home and stick. That's a political campaign. And Ethereum, companies aren't holding ETH on their balance sheet. They're just not. And that they're spending that money in other places. That's one thing. The other thing I would say is you got to have a better communication strategy than sending out tweets like MicroStrategy does. We acquired another 3,000 Bitcoin at an average price of this. We got this much on the balance sheet, pumping up likes, putting laser eyes in your shit. It doesn't work when push comes to shove. This is barely even a price drop, by the way. Most bear markets don't finish until the price drops 85% from the high. We're only at about 74%, or we were at 19,000. Now it's probably, it's got more room to fall if that sort of long-term trend holds. There are better ways to spend money than putting Bitcoin on your balance sheet, is the point I'm getting at. Now, even worse, it sounds like these guys are levered up on the hardware too. So you telling me that these mining companies are levered up on a piece of hardware they know is going to be half as valuable in 2 years or 3 years, and an asset they know can go up or down 85% over the course of 6 months. And they did it, like Core did it at the high, it seems like, and then they had to sell at the low. It's a mind-boggling. The question we should be asking is like, who's on that board? Who's the fiduciary on that board that said that was a good idea? Who are the people who voted yes to all these things along the way? It's real easy to go on podcasts, do interviews when you're the CEO of a company that's absolutely ripping, and talk about how you got Bitcoin on the balance sheet when Bitcoin is at the all-time high. We've had a number of CEOs on who don't have Bitcoin on their balance sheet. Frank Holmes is one from Hive. And, those guys don't keep Bitcoin on the balance sheet. They might keep a little bit, but generally they sell the Bitcoin to cover their OpEx. This is what you have to do to survive, because now Hive is going to look at Core Scientific, who's going to have to sell hardware, who's going to have to sell capital, who's going to have to find ways to have their shit financed. And that's an easy one. We gave a lot of shit to FTX, Sam Bankman-Fried, for doing similar stuff when BlockFi was about to go tits up, right? He made a play on acquiring BlockFi. This is how consolidation happens. Now, I do agree with you and my co-host, who's not here to defend himself, that the consolidation in mining is just getting started. Is it going to go from 50 to 15? I don't know. That's a lot of consolidation, a lot of M&A. But there's no way 50 publicly traded miners need to exist. What is the competitive advantage between 10 of these miners, let alone 50? Are you telling me you wouldn't just rather buy the biggest cap or the smallest cap, or try and find the one that's, trending in the right direction, or do a momentum swing trade style strategy, knowing that you're a Bitcoin bull long term? There's no need for 50. Now, to to Ben Gagnon from Bitfarms. Smart guy for sure. Okay. But, you know, you and I have both had him on. I like Ben a lot. I would just point to, I thought Ben was right about Bitfarms buying Bitcoin last summer, or I guess maybe it was like last spring or something like that. I forget exactly when we had him on, but it seemed like a good move at the time. And his rationale was, we can get the Bitcoin now faster than we can mine it. We like the price. Well, you were wrong about the price and you were wrong about the mining speed. You're wrong. You're wrong about both. You were wrong about whether or not that was a good move in the moment. And we were wrong as interviewers, as whatever content creators, not to push him further because we didn't know any better. And I think a lot of people make that mistake. Now, I'm not saying Ben didn't have a good rationale at the time, but the fact of the matter is they ended up having to sell half their stack, and they may still have more to liquidate to make it through another 3 months of chop if we get it. Or heaven forbid, Brandon, like if the Qs take a dive after earnings this week, like what's Bitcoin at right now? So Bitcoin is down. Now it's down near 20,000. So, you know, like you're off another 3% from the high yesterday. This idea that like it's an asset that's decoupled enough to take risky plays with that BTC asset as your basis, as your collateral, is wrong. It's wrong. And until it does get to that point, pretending like it is there by putting it on your balance sheet, leveraging it, all that stuff is the wrong move. Spend the money, do something that's going to help the price stabilize. Those guys have the firepower, the connections and all that to make a play of that nature. And they're not doing it. I don't know why, but they're not doing it.
Yeah. I mean, you know, what I would do personally as a personal investor and compared to the way I would run a business are two completely different things. So I kind of agree with you there. Like I would, if I was a Bitcoin company, I would just have a shit ton of cash on hand at all times, like almost enough to run your entire company for 2 full years without making a single dime.
Which we should mention is hard to do. Like I'm not saying this stuff is easy, and you're not either, but it's important.
Yeah, it's extremely hard. And, you know, at the end of the day, what you do is you mine Bitcoin, right? So you could always theoretically gain that Bitcoin back by selling it, right? So, but you run into the issue, right, where you're selling and you're not really sure like how much the margin is. But I mean, I think like everybody kind of dives into that point where Bitcoin's running up, and, you know, we see it with friends and other things like that, right? We have people, oh shit, Bitcoin's at 60,000. Should I buy in? Should I buy in? Like all that kind of stuff. And I feel like a lot of these mining companies, they're young, right? So maybe this is their first run up, or maybe it's, you know, their CEO's first kind of exposure to it, or their CEO's first company, right? They don't even know like, you know, how to really even run this. And I think that that's where what we're kind of running into is like, a lot of these companies are young. A lot of these CEOs are young because they're kind of learning the ropes of business just in general. And they're kind of going through, and they found Bitcoin. They got passionate about it. They got, you know, really into it, and they knew about all this stuff more than anybody else. They sold some, you know, wealthy investor like, hey, listen to this, you know, Mark Zuckerberg type of nerdy kid going through and selling all this stuff, and they sound, you know, very intelligent. And then at the end of the day, you know, they take a couple risks and they get a little screwed. And I agree with you though about having Bitcoin in the balance sheet. I think it's good, but I personally, I don't really take too much weight in it, because I think that, you know, because of it's so volatile, you're essentially having it there just as like backup. I don't think taking any leverage risk, getting loans back on that is smart to buy equipment, like you said, that it depreciates in a couple years, because, you know, these miners at the end of the day, 2-3 years basically is their shelf life. If you can get a miner that works 6 years, that's outstanding. But, you know, by the time that 6 years come, or those like 3rd, 4th years comes, especially with the way the halving cycle works, majority of the time that computer is not going to be it's not even going to be worth it, right? It's going to be an old machine, outdated, and it's going to cost you more money to mine than it is to actually obtain any of the Bitcoin. So, you know, and to your point about Ben, he kind of went through it on my show, where he was saying that essentially the reason they sold the Bitcoin that they had was because they had contracts come up and they needed to sell to fulfill that.
He can spin it however he wants. The same way Core Scientific.
Hey, I'm a writer, dude. I'm not going to
listen. I like Ben. I'm not saying I don't like Ben. I think he's fucking smart, man. He's part of that Bitcoin Mining Council presentation every quarter. He's a smart guy. 100%. He gets it. He may get it more than anyone else, but you know, like much the same way that we give people shit like Core today with their press release oh, we were influenced by the cost of energy going up, the hash rate going up, the difficulty going up, the contracts, the power stuff. Like, you can say that you were affected by that. I get it. But ultimately, the problem is you didn't manage your risk. It's not like you can't go on Twitter every day and find a thread about how dangerous it gets for miners who are levered up as the hash rate goes up and the price stays stagnant. Those threads are everywhere. There are tons of Bitcoin bears. And I would also make another point about the hardware. The same people who know that the ecosystem is young and still developing also have to know that the hardware and the speed of the hardware development is going to increase much, much faster in the next 5 years than it did in the previous 5. Okay. You don't have to look that far to figure this out. In 2016, the S9 was released, and there's still S9s running today at a loss, but there's still S9s running today. The loss is not so significant that we have to take those things offline, that they have to be replaced. You're not going to be running S19s in 5 years because there's going to be too much growth, too much competition. Stranded power is going to become a real thing. Nuclear may also become, like, all these things are going to change the way that technology curve goes as far as adoption, sort of peak usage, and then obsolescence, right? May not be 6 years for the next cycle. It may be 2 years or 3 years. I have no idea. But we've seen this everywhere, that you can get way faster computers, way cheaper, way more quickly than you could 20 years ago, right? These things they're all happening at the same time. And when you talk about application-specific chips, the ASICs, I can't imagine that companies are not going to jump into this, right? This is where the money is. You and me know this. We see, and like, we talk to people on our programs all the time. We say, like, the price is down, but the capital investment is through the roof. It's an all-time high. And the number of minds coming into this, all-time high. Politicians interested, all-time high. Companies that are doing other hardware and software, all-time high. The competition is going to get stiff, and they got to know that. And Core, I don't want to pick on Ben, but like Core, great example. This, BlockFi said, oh, we weren't expecting these blow-ups, this blah, blah, blah. It all comes down to whether or not you manage your risk. And straight up, they didn't. And we're going to see other miners have the same problem, I bet, Brandon. I wouldn't be surprised.
Yeah, for sure. And for those who don't know about the Core situation, I pulled up Dylan LeClaire's tweet where he highlighted part of their SEC filing, but essentially it just said, like, they're halting all their debt financing payments. So in other words, they can't afford to pay some of their loans back. So essentially they're fucked. I mean, I don't even know how else to put it. Their stock price dropped, I think, by 80% today too. So
80% was the number?
Either 75 or 80%. I know Len was kind of texting us about it, and I think he tweeted it too. So
80% and 5 more after hours. Oh my God.
Yeah. So a really big fall from grace for all the Core bag holders out there. So I mean, it just shows how tough of a business it is, though. I mean, it's just like exactly like you said, you got to look at like the competitive advantage that these companies have. And I think as far as mining goes, it's one of the hardest, if not the hardest business out there around Bitcoin at this point, because it's so affected by the price, and it's affected by more outside factors than any other Bitcoin company. It's affected by regulation. It's affected by energy prices. It's affected by, all these other kind of, so price, regulation, and energy price. So, I mean, those three cogs essentially affect how well your Bitcoin mining operation is going. And at the end of the day, a lot of these companies, they're, like we said, like trying to find places where there's cheap energy. Well, you run into some potential geopolitical risk. Then, you've seen like other companies go to like Russia, and Compass Mining comes to mind, right? They go to Russia for the cheap natural energy that they have out there, which obviously Russia now is kind of like pulling some strings on the rest of Europe, but they essentially would just confiscated all of those. And so that's a kind of worry that I have when it comes to Southern America, where it's like, okay, like maybe all these companies moving down to South America because it's cheaper energy, and there's a lot of positives coming out of there. Well, at the end of the day, there's been a lot of corrupt leadership in South
They're
America.
that's the gold machine gun index over there. Like, you're
Yeah.
gonna see people in chopped off Jeeps with machine guns. You can't invest in a place like that. And to your point about geopolitics, like, if you're trafficking in anything that requires chips, you're really gonna rely on China, Taiwan to send you these. Like, you can't. This is not a reliable model, man. It's just not.
Yeah. And so I know like more American companies are kind of getting into it. We've seen Intel, we've seen some others, but I mean, all this stuff takes time to develop. And the thing about Bitcoin is it just keeps moving, right? I mean, we're seeing the hash rate keep increasing, more miners coming online every day. It's like, how quick can some of these, one facilities pop up, because we need more facilities, whether it's in, Canada, North America, all that kind of stuff. Because I think, the way that things are going, we're moving to more, I guess, a nationalistic kind of economy instead of this more global economy that we have right now, because of all the conflict that we're seeing. We're seeing the issues of it, where it's like, okay, if you become reliant on one country for one specific good that you need, that country has basically has you by the balls at this point.
Yeah.
And so that's what Russia's doing, where if you get somebody like Putin in leadership and he wants more control, he's just going to grab you by the balls and take advantage of that. Right. So, I mean, I think we're definitely in an interesting time. And the biggest worry that I have right now going forward for Bitcoin is just the miners in general, just all this going on. And it's all right. I just don't really see any positives coming out of it. I mean, I had Mike Hobart, who works for Great American Mining. He's on one of my spaces, and he was saying like, yeah, we should definitely be worried about this, because, whether it's companies just mining based off flare gas or other things, like, we're still, it's still operating at a close to a loss at this point.
So what do you do if you're a miner? Like, I talked about some of the things I think they should do, but that would have been good for them to do 2 years ago. At the moment, what are you going to do? You're basically stuck between a rock and a hard place. Either you sell Bitcoin at a like absolutely massive loss, or you sell hardware, or you throttle down your power consumption, or you start hosting maybe, or you find some other way to consolidate debt with some of the assets you have, maybe real estate or land. Like, there's not a lot of good options. And I think a lot of these guys, much like Bitcoin hasn't been through an environment like this, where there's been sort of a tightening of fiscal policy and an unwind of a bubble and geopolitical issue that's causing power prices to spike in most modern economies. Really, these guys they just plain out were ready for it. And I'm not saying it's easy to be ready for it. Other companies, Amazon, for example, potentially also not ready for it. But Amazon's got, a $1 trillion war chest. These other companies do not. And they don't have services that are outside of the realm of the physical needs of a miner. There's no AWS over at Hut 8. There's no AWS over at Bitfarms. They have only so many levers they can pull and press and work with to try and sustain the operation. But long term, I think the other thing they're gonna have to do is find other revenue streams. I don't know what they are, but is it like, it can't be lightning routing. It ain't going to be that. It can't be, I don't think it can be hosting. We've seen all those hosting companies really have a really hard time over the last year. So what is it? I don't know. You got any ideas?
I mean, fuck if I know, man. I have really no idea, and I don't really envy any of these people in this position. But I mean, to your point about like the AWS and other things like that for these companies, I think we just had like Compute North, I want to say, was like a Bitcoin/crypto mining data center, and they just went under as well. I think like about a month or two ago. And so like even some of these other like crypto mining data centers, they're also like struggling now too. So, I mean, I think it's just going to be a case where a lot of these companies that aren't really positioned very well are going to start doing the things exactly like you said, right? They're going to start selling off their hardware, and it's going to be some of the big dogs that were really prepared for this that are going to come in and scoop up a bunch of cheap hardware. And, maybe it's as a point where some retail miners pick up 5-10 miners for cheap, a couple $100, and then it becomes a little bit more decentralized where people are actually starting to mine. But I also think like this whole scenario is almost the death to some of these at-home miners. Like, one, it's not already really feasible themselves, but two, like, you're probably not getting a cheaper deal than the industrial
No,
miners on energy prices. And two, like, I mean, at the end of the day, like, yeah, if this price keeps continuing flat and you lose your job, what are you going to do? You're not going to keep that mining and keep that extra expense to get, your non KYC Bitcoin, right? You're going to have to sell all that stuff too. So I think we're kind of in an interesting time and in a decent like inflection point, because not only are we in a bear market for Bitcoin, we're in a bear market for the whole global economy. And I think this is the first time kind of in Bitcoin's history that it's been in this scenario. We've seen Bitcoin have its downturns, but at those points, it had, the economy was ripping for the past like 10, 12 years, except for starting in 2020, we've kind of had that up and down swing. But I mean, to that point, it's been relatively smooth sailing since Bitcoin's birth. So
it's been nothing but smooth, not relatively smooth, like purpose driven smoothness in the economy. Like the Federal Reserve and other central banks have tried to smooth out the business cycle, the economic cycle, and they've been fairly successful. I would also add, as far as like the Bitcoin bear thesis, I keep on seeing these charts from the the Glassnode broccoli haircut boys that the long-term holders are, it's the most coins ever not moved for a year, blah blah blah. First, okay, a couple things. One, a year is not that long. Okay, it may seem like a long time when you're 20, but it's not that long. Second of all, this idea that this economic downturn where rates are still going up, they may be stopping soon, but they're still going up. I know some friends who were hit by the trigger rate in Canada this hike. I don't know if we were or not. We may have been, but who are now suddenly saying my mortgage rate just went up by like 20%. Like I got to pay like another $400 on my mortgage every month. Like where am I going to get 400? Well, I'll tell you where you're going to get it. If you're a Bitcoiner, you're going to sell some Bitcoin at a loss to keep the roof over your head. That's the first thing you pay. And these pressures for the first time are going to really test people's mettle. It's very easy to say to your friends to run a podcast, to do these things related to Bitcoin when the price is 65,000. But when the price is 22 or 21 or 19 or whatever it is right now, 20,420, if the price is in that range and you find yourself with extra expenses, and it's not only mortgage rates, Brandon, groceries are up by 10% basically across the board. That's what the generous government interpretation of things. Energy is high. I know it's about $1.70 a liter for 87 octane in Ontario right now. The price is going up over $2 tomorrow. There's an announcement earlier today that something is happening overnight. It's going to cause the price to jump. So like, if it costs you $80 to fill your tank today and $95 to fill it tomorrow, you're going to sell something, man. It ain't going to be your dog. It ain't going to be your TFSA, or you're not going to get your RSP, your retirement account. Get that thing ready to sell. It's going to be Bitcoin. It's liquid. It's available. And I would argue, Brandon, that there's a lot of people who don't have that much conviction. A lot of people who don't have that much conviction. And I don't know, I don't think you and me fall into that category, but there's a lot of people on Twitter who are enjoying the memes and having a good time. They've been here a year or 18 months. Let's see what you're made of. Let's see what happens to that price pressure. I bet you it comes in hard and fast.
Yeah, so I mean, I guess this kind of just reverts back to your overall thesis. Do you think we're kind of still going to fall down to that 85%?
Oh yeah, are you kidding? 100%. There's
Think
no
that's
way.
around
There's
14K
no,
or
if this
something, right?
keeps up. I don't know if it's gonna be 14, but like, if 75% was 19,000, do the math. It's another 10,900 or another $1,900, right? So what's that? 17,000, something like that. I think that's reasonable. I wouldn't be surprised. Who would be surprised by a move like that? We have a group chat where you guys give me a hard time about the DCA thing, but the fact of the matter is, if that move happened, none of us would be surprised that it happened. It would just be another day in Bitcoin, right? But I think a lot of people who, and one other thing I'll say about the downward pressure, there's a lot of people who are like, oh, I can't sell at 20K. It's too much of a loss. But there's some threshold for people in stocks, in Bitcoin, and whatever liquid market, where even if you don't want to sell, the fear of having to sell at a lower price during like downward momentum is overwhelming to people, especially if you need the money. And you may find people willing to sell as the price drops a little bit, and that'll push it lower. Like, this is not that hard to figure out. The psychology of markets is a weird thing, but it's a story on repeat. This happens all the time in a lot of markets, and Bitcoin's no different.
Yeah, and what I think is interesting too is like, I mean, this is not just Bitcoin news, but it's I saw a tweet from Unusual Whales that I think it was 40% of brokerage accounts that opened in 2020 have now closed, and 40% or 30% of those were of millennial age range. So I wonder if that's either one because they lost a bunch of money, they were kind of FOMOing into your GameStops and maybe doing a little bit more risky things, crypto, Bitcoin, and they've gotten burned. Or two, they just needed the money for liquidation and they're just, but either way, those are both negatives, right? So, I mean, one, they're just like, all right, fuck this investing thing. I'm losing money. It's stupid. Everybody said, stocks always go up, as our friend Dave Portnoy was always saying during all that. And or like they just needed the money because inflation's running rampant. And I don't see inflation going anywhere anytime soon, right? I mean, we're deploying more oil reserves. We're gonna still float around whatever your gas price is right now in the United States. I think near me, it's like right around 350 or so.
It's a lot, man.
Yeah. And I mean, we're still going to be floating around there, I think, for quite some time until, shit really hits the fan. And
Well, what's going to happen when the SPR releases stop? Let's assume that the Republicans win in a couple of weeks. The SPR releases stop or slow down. What's the plan? There isn't one. There's no plan. There's no plan.
No idea.
You're either going to put upward pressure on the price refilling the SPR, or you're not going to refill it, and the price is going to go bananas anyway because the demand's not going to slow down. Not to mention, would you be surprised? This is like a little bit speculatory on my part, but if China reopens full as the SPR releases stop, what's going to happen to global demand? It's going to go through the roof. Like you can't compete with these market forces. There's too many things going on. One other thing I'll mention on the downward price pressure, how many people from 2020 who used all that stimulus money, right? During that, okay. So I'll lens in the chat. I take issue with that comment, but how many people who bought Bitcoin in 2020 with all that stimulus money bought only Bitcoin? Probably not that many. And so if people, let's say you're in Celsius, for example, right? Easy to pick on Celsius. Let's say you're in Celsius, you watch that thing go tits up. Would you go to your crypto portfolio in Robinhood and sell everything but Bitcoin, or would you sell your Bitcoin too? You'd sell your Bitcoin too. Yeah. And so like all that pressure, as more of these tokens go to zero, that pressure is going to drop. Now, Len is saying half the SPR goes overseas, and so it doesn't help Americans that much. That's wrong. It does help Americans because the demand is global. The supply is global. The price is priced all over the world. And so whether or not that supply is somewhere else or in America, it still helps the price go down in America. It's a global market. So it may not help as much as we think sometimes, but absolutely it helps Americans for sure. That SPR is oil on the market, and more oil on the market drives price down, period. It's a global market. It's not just Americans who are buying that stuff.
Yeah, I agree on that second point. And the first point too, I mean, I agree as well, where it's like everybody was just buying all these shit coins, right? I mean, because at the end of the day, we're talking about how volatile Bitcoin is when it comes to miners holding that on their portfolio. But the reason that shit coins get appealing to people is because that volatility is just like 10x, shout out Grant Cardone and all his 10x bullshit. But some of it's like 10x the volatility of Bitcoin because there's just obviously less demand and whatnot. And there's, it's at 0.0001 cents. And you buy like 1,000 of these and it's going to shoot it up like to a couple, a half a penny or something like that. And then that's, 1,000,000% up. And like people are always going to try to find that. And they were trying to find the next get rich quick scheme at that point in time. And so I think we're like kind of moving past that because now people are kind of panicking and they're like, oh shit, like I need to figure out, I think the savings rate's probably going to go up if they can save. It's not going to be invested. The amount invested is going to start to change. And, we're going to see people kind of start to pull away from, these kind of investments, whether it's holding Bitcoin, holding any kind of stock or anything like that too. So I don't know. We're definitely in trying times. And I think this whole episode's been kind of doom and gloom, but I think it's like, it's a point though, that I've been like, especially with the miners that's been on the top of my mind. And, I really wanted to get a discussion out with this, because I think we have these kind of on the spaces every now and then, but we can reach a little bit more people here and get it.
Be prepared. Be prepared for a downswing. Like, that's all. It's what about this asset class should tell you that it's going to be up only? What about it? Nothing, zero, zilch. And there's more pressure on this thing politically than ever before. If there was ever a time to expect some downward pressure and some scary moments in legislation, for example, this is it.
Yeah, exactly. And, I guess that super cycle theory proved to be incorrect. So, and I don't think we're going to be there anytime soon either. But to wrap it up, I do have a bone to pick with you. You always bring it up in the chat, and you bring it up to every single one of your guests about the 40-yard dash. So for those who haven't listened to the Canadian Bitcoiners podcast, you should check it out. But Joey asks every single one of his guests and pins him against him or her, against somebody else in the Bitcoin space, ask them whether or not he or she could beat them in a 40-yard dash. And for some odd reason, Joey believes fully that he can beat me in a 40-yard dash.
I could for sure.
There's 0% chance that this could happen. I don't like to brag too much, but former Division I athlete.
There's another Division I athlete in that chat who knows you, and I gotta say, there's not really a chorus of support for your cause. You notice that?
Dan would never back me up. 1 and 2, I would smoke. Dan will probably admit this too. So me and Dan both ran track and cross country in college. So Dan is the typical cross country runner where
he's
got no foot speed.
You just froze up.
Oh shit! Right? Yeah, I have foot. I'm talking so fast, I'm freezing up, bro. But at the end of the day, I got some foot speed, dude. I ran a 50.9 in the 400. Watch out for me. I can move, dude.
Is that good? 15.9?
50.9 for a single lap.
50.9. 400.
And on a single lap on the track. So I want to see you go try and do that. 0%.
I don't know. I don't know if I could or not. I'd have to, for sure.
No way.
These days, I'll tell you that I am like,
this is a long way too.
Yeah, so. It's a long. Yeah, it's half a click. I think if we were gonna race, we probably will if we go to Miami or some conference next year. I think it would honestly have to be on grass, because I honestly don't think I could run on pavement with that much force anymore. I couldn't do it. But on grass, I think I could do it. And I'll say this, we joke all the time about how I'm still playing sports, even though I did do that Achilles, rupture not even a year ago. It was like 8 months ago. I gotta tell you, man, it healed pretty well. So I honestly don't feel any slower. No one I know seems to think I'm any slower. And I haven't lost in a foot race. I ain't lost in a foot race in a long time. I ain't planning on starting anytime soon.
Me neither, buddy. Me neither. The last time I lost in a foot race, I was in Division I track. So that's all I gotta say about that. Every time I race
40 yards is a different game than distance. I think
right.
I think it is. Like that first step is important, but it's not even that first step. It's like you have to know if you're winning the race, you can't let up. And if you're only down by a little bit, like there's definitely times where you could see a guy who's a little in front of you who thinks he's going to beat you, and you may think that for a split second, but he'll tire as you are hitting sixth gear. You got to have that little bit, that dog in you, as you like to say.
Yeah. Well, here, I got a little story to tell. So last time somebody challenged me to a race, we had a triple jumper on our team where I found out later he was like a decathlete before. So
what's a triple jumper? I don't even know what that is.
So they jump 3 times, basically. Like you run, you sprint, you jump once, then you land like on one foot, jump off of that, and do that 3 times. Okay. And so he was a very good athlete. I think he ended up like getting like either first or second in NCAAs, which is like absolutely insane. But turns out he was a decathlete before he came, which is like basically they do 10 different events: running, sprinting, throwing, jumping, all that kind of stuff. So he wasn't a slouch, but he thought he could beat me in a 600 or lap and a half. And the bet was the loser has to shave their head. And I'm about to pull up this picture. So shout out to Manuel over here. Sorry I had to do this to you, buddy, but look who got his head shaved.
Wow.
It wasn't me. There's the young baby face B Keys over there.
But it's like 600 ain't 40. 40 is like you gotta be able to produce force fast for 40 yards. I think like I am for sure I definitely got a stronger lower half than you. I don't think there's any doubt about that. The question is, do you think you got some kind of technique that gives you an edge in a 40-yard dash? I don't know if you do or not. I have no idea.
Like the argument that you could probably make is like you could probably get me off the start. Just like, I mean, that's why I've never had to work on that explosive like beginning start. But
Okay.
the longer it gets, the more I'll catch you.
we have to do it. We have to do it. We have to do it before you turn 30 so that the loss is that much more painful for you.
Oh my God. Yeah. All right. All right. Well, on that note, Joey, I really appreciate you coming on last minute.
Anytime, buddy.
So I got an exciting guest for you guys next week, but she was a little.
Who's the guest? Who's the guest?
I'm not gonna say just in case she's still not feeling well next week, but okay. I'll maybe text it in the chat or whatnot. But yeah, Joey, why don't you tell everybody where they can find you and what you got going on?
Canadian Bitcoiners Podcast, man. Look us up, YouTube, wherever you get your pods, and stop in on Monday nights, chop it up with us and Brandon sometimes in the chat too. So yeah, if you got time, we'd love to see you there.
Amen. Yeah. Who's the next guest you guys got lined up? Can you share?
We got Jaron Melrude, whose name I have butchered so many times on our air, who used to work for Arcane Research, big Bitcoin mining / energy guy. Looking forward to talking to him. He's a wealth of knowledge on Twitter and he was very accessible. So I'm happy we're bringing him on. He's got a lot of good stuff to say.
Man, I'm following up. I think I'm following him, or he's following up with me like the week after. So
good.
A little teaser there. But he's
man, like this, especially now with all the mining stuff, like he's a great guy to bring on. It's just the timing worked out.
Oh, 100% for sure. So Joey, thanks again, man. I really appreciate it.
Anytime, bro. This